The audio conference will now begin. This conference is being recorded. Entry and exit chimes are off.
Okay, guys. Good morning. Can everyone see the screen? Okay, and is the audio good? Okay, thanks, Mike. So let's get started. So the first thing that I want to point out this morning, first of all, we have a channel going, and it actually comes back from where we started this down move, and obviously it looks like we're trying to open just above it. We're currently trading 1870 and a quarter, which puts us right at the top of this channel, and it'll be very interesting. So usually, even in bear markets, and we'll go back and look at this in a second, even in bear markets, and we're not in a bear market, V bottoms tend to produce balance with a slightly upside, slightly up move the following day. It can have a strong move to the upside, but usually it's usually accompanied by a pretty strong gap, and we're not getting that. In addition, there's obviously a large difference between what's going on in NQ and what's going on in ES. We're not far off the highs at this point. We could easily attain them in a day. If we had a big day, 2 days, if we had a small day, and be right back to the year-to-day highs. So it's important. And I want to reiterate this in this environment. Let me get my drawing tools out. Where are they? There we go. Okay, so it is important that we not get overly bearish when the market looks like it's going to zero. Okay, it usually has nasty rebounds like yesterday, which we saw, and they can be vicious to the upside. What's really getting hurt is NQ actually and not ES. So keep that in mind today. So in addition, just because we've had a V reversal does not mean we cannot continue down back towards a retest of the I think it was 1807, 1808 were the lows that my guess is at some point need to be retested and possibly broken. But apparently they're not quite ready to do that yet. Also keep in mind, and I want to check my dates here really quick to make sure I have this correct, but I believe the Fed minutes are released tomorrow and not today. Let me see this. Of course, that would be important. Okay, I do not show any Fed minutes being released today. It must be on tomorrow's calendar. Let me check. Tomorrow. Yep, at 1 o'clock. FOMC statement tomorrow at 1 o'clock. So my guess is with the FOMC statement that it'll probably be squaring in front of it. And if we do get a downside rollover, I would also look for shorts again to come in and cover in front of that FOMC statement. They've been fairly benign. And obviously they're not driving the market or tanking the market either way. This morning, depending on your notes, at 10 a.m., 9 a.m. Central Time, we have a consumer confidence number at the top of the hour. So in terms of looking for trades today, so obviously getting above and staying above yesterday's high would be important. And then the next area that's really going to be a challenge is Friday's high. Right up into this 1882.50, if you recall, this was actually, I usually don't use Globex high, someone asked me this yesterday. But in this particular case, I will. Above 1882.50 were actually very poorly auctioned. There are zones above. And I do have 85.87, but only because it is an exhaustion point. Okay, I'll probably, so a couple of notes. In this area right here, I do intend to take this trade, but I want to see tick divergence on a 1-minute chart in order to enter the trade, or price action. Obviously, I can't define price action. I know it when I see it, kind of thing. But tick divergence helps significantly. And as long as this doesn't get hit in the last hour, I will probably look to take a trade in this area. I'm simply cognizant that it was poorly auctioned up here. It can get moved through fairly easily. And so I have two strategies that I can do there. Knowing that it was poorly auctioned, I can simply opt to take the back of the zone with a 2-point stop, and if that's my risk, that's my risk. Or I can treat it as, if I see tick divergence, I'll take the trade, and then, of course, the same exact risk. Or I can choose not to take the trade because I know it's in a poorly auctioned area. Those are your three choices. Whatever you choose to do in this area, right, you should know what you're going to do prior to the trade getting there. My two entries are going to be either based on price action, where I see a stop in the dome, right, or preferably tick divergence for entry into this area. On the upside areas, I will take a trade. Friday's high, first time in, I will take a trade there, barring an open drive higher, which I don't expect, but we could get. Okay, and so let's review that really quickly so we understand what open drive higher looks like. This is open drive. This is a perfect example right here, so we'll just go to it. This is an open drive lower. Picture perfect. It's actually a big open drive lower. It doesn't have to be this big. It can be smaller bars, but it's essentially first bar is the 5-minute high, or if you flip it, 5-minute low. 2 to 4 bars, pretty much straight down, right? And that is the definition of open drive lower, and tends to lead to trend days down or trend days up, or at the minimum a range extension. Now this thing was so huge and so wide and so fast that it got overextended quickly and got snapped back. But usually that pattern on the downside when we have it looks like this. Comes back up for a breather, and then we tend to kind of trickle down till midday, and then they make the decision, like yesterday, if they're going to snap it back or if they're going to just keep it in balance or move it back to the lows at the end of the day. The moving it back to the lows at the end of the day or highs at the end of the day is the least likely scenario. The balance between midpoint and low, or if it's trend day up, midpoint and high, is the more likely scenario. And remember, because the leadership is shifting from NQ over to ES, that the ES is the leader. And what that means is we're going to get a lot more of the traditional trades of what we've been seeing over the last 3 weeks, which is just awesome. What that means is the patterns will generally be on good extensions up during that reversal hour, meaning 9:30 to 11 a.m. We will generally see a peak, and then we will see it start to reverse the other way. And then in the afternoon, it'll make a decision of which way it wants to go. If it's a really strong move up or down, it might delay into New York lunch either way as it did yesterday. But on good extensions, I expect responsive sellers and responsive buyers on both sides of this tape, which is awesome for us. It means that there's a lot of money to be made for the type of trading that I do. Okay, so let's go with upside scenario. I need to clean this up. I'm either hoping that Globex high moves to the 74 area, right? Or otherwise, I'm basically going to have to adjust the zone, and the zone will look like this. Essentially, what is that? 72 3/4 to 70, 75 will basically bump up a point. And right now, that looks like what it's going to be. So if you're manually putting out the chart, it looks like this is what we're going to end up adjusting to for Globex high. So there's a couple of things that you need to be aware of in this area. First of all, gap fill is right here. Okay, everything right up to this point, all of this is incredibly poorly auctioned. Okay, and it would be very easy to slip back into gap fill. So you have to be cautious. If we come up to 72.75 and you're looking at half gap, okay, half gap can work. It doesn't mean that it cannot work, but it's the middle of no man's land. And that makes it much easier to stretch all the way down into the gap fill and Globex lows, okay, for reversal higher. So remember how I'm thinking when I trade. I'm not trying to capture every trade. I'm trying for the most part to sidestep areas. There's no consumer confidence today. Excuse me just a second. Mike just said, if you look on Forex Factory for today, usually they're pretty good. They show 10 a.m. CB consumer confidence. So unless you know for a fact that that it's been canceled, someone else can confirm that. But I'm showing 9 a.m. consumer confidence Central Time according to Forex Factory, and I pretty much have been using them for years. They've been pretty accurate. So, okay, got it. Thank you, Mike. Okay, so continuing through. My objective is not to capture every single trade. My objective is to sidestep the potholes whenever possible, so I'm not taking drawdowns, and only take the trades that are going to give me the highest odds of making money. So when I see an area poorly auctioned, like I do through here, okay, I know essentially we're going to have a gap here. If we open it, let's say we open it this 72 area, right? So if you can imagine, there's technically is a bar that would look like this. It would go straight up, and it would look exactly almost like this bar. It's just imaginary, right? So there's nothing here, right, to hold it. Now, in a super strong market, half gaps, right, find responsive buyers, and they take it up, as we witnessed in February and March. But we're not in a super strong market. We're in a range market, okay? So that gives me pause here, and all that means is I'll skip the trade. If it works for somebody, fantastic. If it doesn't work for me, again, all I want to do is see my P&L continue to rise on a day-by-day basis. And if that means I skip a couple trades in between that would have worked, but I couldn't tell ahead of time how clean it looked, that's cool with me. I have no problem with that. The pain of day trading is this. You can put together strings of days, 5-6 days of winning trades, and then you take 1 or 2 bad days and it wipes out the string of 6 days. I know probably everyone in here has experienced that. I know I've experienced it in my career, and I got really tired of it. And I found a way where I pretty much can stack up profits, not every single day, but close to almost every day by focusing on specific areas. So what that means is that, yes, right here, we could get a responsive buy. It is possible. There's technically, that is structure right there. But I simply expect that they're going to come in and attempt gap fill, especially given how far we are off the lows from the prior day. So that's my reasoning there. And more importantly, I think I wouldn't want to take it to gap fill, but I'd prefer a test of Globex lows. And in general, okay, let me show you all a bigger picture so we know what the problem is today. I'll show you all two things that give me pause about being overly active today, at least until I get some clarity. Okay, in areas that are poorly auctioned like this, again, this is a 15-minute chart. I usually don't work off of it intraday, but it illustrates my point very clearly. Okay, when you get big sweeping areas like this, okay, they tend to get re-auctioned. Just like all of this was poorly auctioned. Notice we had structure right here. We got responsive sellers temporarily right there. But overall, it was all poorly auctioned, and it probably wants to re-auction pretty much all of this right up to here. On top of that, up here, past this point, poorly auctioned, and then past really this point right here, poorly auctioned, and then up to 82.50. Okay, so, but in particular below here, when I see these large blocks, very little volume went off in this block, and we could easily get re-auctioned down to 18.55. Would not be a stretch at all. And if we get below this point right here, all of this was poorly auctioned right down to about right here. Okay, what that tells me is really, really cool actually, right? So what that tells me is I don't need to take any kind of extended risk in this area. It's going to be hard to trade in all of this. So that wipes out, let's see what that wipes out essentially. So that wipes out everything essentially below 1863 all the way down to, I'm going to say 1855, right? And then below 1852 all the way down to 1847. I know all of that can get slippery, and I don't have to overcommit, and it can do it one of two ways when it re-auctions it, and I'll show you in just a second, because I want y'all to understand what kind of price action this generates. It's one of two things. It either comes through and grinds all of this down, and we re-auction all of it, coming all the way back down, or because it's so slippery, it just goes whoop, just the other way, just like we did right here. We poorly auctioned it on the way down, we poorly auctioned it on the way back up. Okay, so also to be cognizant of, this was from the swing high to swing low. This is a 62% retrace approximately right here. And so it's important that we stay above. Buyers are going to want to see this stay above gap fill. It's almost certain that we need to re-auction this 1840 to 42 area at some point in the days to come, but it may not be until after the Fed meeting takes place tomorrow. Okay, to give you an example of what that looks like going back in recent history. Okay, so you see just to give you all an idea. See how this was all, in general, this was all well auctioned? And see how below here, and particularly below this point right here, this is all really poorly auctioned, actually all the way down to here and all the way through here, okay? So when you have poorly auctioned areas, it doesn't have to re-auction the whole thing at one time. It can get overextended, which is a nature of having a poorly auctioned area, okay? And then you get responsive buyers only to come back later. And so the last piece I want to give you, so you understand that price action, Give me just 1 second, guys. I need to respond to it. Okay. So hold on 1 second. I'll show you how this occurred. Okay. Give me just a second. There's a technical issue here on my end. Give me just 1 second. Guys, is anyone else having trouble getting in? Was anyone having trouble getting into the TUES meeting this morning? Everyone else is in. Okay. 1 second here. Just 1 sec. Okay, so what I wanted to show you is, okay, see this area here where all of this is poorly auctioned and all of this is poorly auctioned right up to here? The danger is, on the way back up, as you can see, this was also poorly auctioned. It comes back up, re-auctions a part of it, we go back lower to recheck it. Why? Because on the way back up, all of this was poorly auctioned. So it came back, re-auctioned it, and when it re-auctioned it, it still left it poorly auctioned, which left us open to ripping up this way. And then all of this is also poorly auctioned. You'll notice when we got up to this area here, the way that we re-auctioned it, we went from a straight line to kind of a choppy but upward move, right? But you'll notice basically nothing got in its way, okay? That's my concern right now on both sides of this coin, okay? Is that not only can we easily auction it back down, back through this on the way down, right? All of this needs to get re-auctioned at some point. But if we look above, okay, we don't get well auctioned in terms of the market price action until we get up right in general, this area as a whole, okay, and specifically right up outside of this gap fill, right up into this little area right here, which is 75.78. But if you look when we get above 75.78, this was the 82.50 approximately that we came to, and it tried to auction it in pre-market. It has not retested during regular trading hours, and we are poorly auctioned all the way up here. So what results when we have an environment like this where it's so poorly auctioned up and down is we get zones that break, particularly weak zones, and we get action that when it starts to grind in one direction, right, is very hard to get responsive sellers. So how do we respond to that, right? How do we figure out the lay of the land when there's no clear area of structure to give support? Like this area, see how this little small area here was well auctioned? And what you saw was even though it broke this area, right, see how it paused? And then inside here it was poorly auctioned, right? And when we got down here, this was the first area of well auctioned area. So it came back up, and all of this was poorly auctioned. We slipped through down to here. We backside tested it, and then we continued lower because what you see here is that this is one of those areas where there was an imaginary line. So all the market did in this particular case, see how we got this rebound here, and it was in a particular day. This was actually turned out, here, let me expand this so someone can see what I'm talking about, because it's critical to understanding the price action day by day, okay, and what might happen today. What you'll see is we got to this area right here. We found responsive buyers. See how we got rotations up? This is almost a 7-point rotation higher out of this particular area. But the last it was in, once it got below this lip right here, okay, it was poorly auctioned. And it became very easy to slip through. And in essence, we had a bar, if you could picture it, that was like this, and that was like this in here. This was all poorly auctioned in here, which is why it was hard to get responsive sellers to hold. Okay, this is poorly auctioned. Okay, back tested, and then it came halfway into this, re-auctioned. Then the following day we gapped down, which left us again another bar, imaginary bar that you can't see. We came back up to re-auction most of it, not all of it. Okay, and then we continued on our way down through all of this poorly auctioned area, right, until eventually we got to the low. So you can see it doesn't go in a straight line. There's responsive buys on the way down, but the market likes to re-auction this stuff, just like it likes to re-auction this stuff too, right? And you'll notice when we get to major areas where there is good auction, let me show you what that looks like, and that's determined by the amount of volume that went off. Like in this area right here, you'll notice because there was sufficient volume, we ended up getting a responsive buy. And if you look, this is a pretty strong rip there at the end of the day. From the bottom of that structure, right? This is 1835 all the way up to 1845. So on a big chart, it's like it doesn't really look like that much, but once you break it down into the details, you can see that yes, even though we're getting responsive buying, it does not necessarily mean that we're done going down and or up in that case. And then it came up into the exact same thing. We re-auctioned back up, not all the way back up, and then we came back down and continued on our path lower. This type of action, right, is exactly what we could see again, probably after the Fed meeting, but with a move back to the downside. Okay, so I went way far into that, but the problem that I have with today's chart, going back to this, is this. There are tons of poorly auctioned areas above and below. So, what I want to see So what I want to see is this morning, based on where we opened, and we're close enough now, it looks like we're going to try and press this 1872 3/4. So I'm going to change the zone here, right over here. Okay, and if this changes, I'll move it back. In other words, if we hit a new high, I'm going to have to adjust it a second time. But for right now, let's call it 1870 to 1872 3/4, right? We're obviously going to open here immediately, and it's going to be damn hard, even for me, when I'm very aggressive, to take a trade at 1872 3/4 with absolutely zero rotation down. It would essentially mean that I'm betting that we're going to open and flush. And it's pretty hard for me to do that. What I'd rather see is actually a push above, hopefully a short squeeze into Friday's high, where I will take a trade the first time in, and then I will leave a trailer. My attempt on the trailer is going to be see if I can't get back below gap fill and Monday's high, and if I can, I would expect a push into gap fill and Globex lows. Okay, from here, it's anyone's guess. Okay, we're either going to respect this channel, fall back in, and then we'll proceed to trade or start to trade back to the other end of the channel eventually. And I would look for responsive buyers the first time in here at the white zone. And then I would look to take a long, and I will try to actually take a long back to get back above Globex lows. And if we can do that and we can trap, we actually have a good chance again of doing another one of these mirror days where we come back up and we close near the highs. I would be cautious pressing shorts at the end of the day, knowing that tomorrow are the Fed minutes. I don't expect a huge move out of it necessarily unless they press really hard on the downside. But shorts have been nervous going into major events the last couple of weeks. I imagine that will get less and less going forward, but it would not shock me to see short covering. On the other hand, if we open and we do come into gap fill and Globex lows, okay, so Globex lows will also be tricky, right? There's not a lot here. There's a little bit of structure, so I probably will take an attempt at 1865, and I will. The problem is you got to give it 3 points to the downside here, because the bottom of this structure is 1863. Here, it was actually well auctioned in this area. It wouldn't be surprising to see responsive buyers first time in. Again, it's hard to be totally clear, but again, I will take a trade, assuming we hold this 1872 area. I will take a trade. Conversely, right, if we don't test Globex highs and we come into this 1873 and then we reverse and come back up into Globex highs from this area, assuming we don't test out of the open, I will take a shot at the short side first time in under this scenario. Okay, but it assumes that the zone does not get tested at all off the open, and the issue with that is we're probably opening in the zone. Okay, so it could pretty much kill this whole area based on how we go this morning. If I get stopped here, the first area I'm looking to take along is down here at this 1853. It leaves a lot of territory, and we may not necessarily get here, but again, this is all poorly auctioned, and I don't feel like having my butt kicked today. So there is a zone for those who want it at 1860 to 62. I won't be trading it. There's nothing there to help me out in terms of getting a reversal. It's just historically, if you look on the chart, you'll see that 60 to 62 has repeatedly been a support and resistance point, but it was incredibly poorly auctioned yesterday, and I don't feel like stepping in at that point. Okay, lower. Let's look at zones lower. If we get below the white zone, okay, obviously a key test will be Monday's low. I will take a long first test of Monday's low. I will take a 2-point scale. I would not expect the same responsive buy that we got yesterday, but it's certainly possible. Okay. In addition, there's a minor amount of support at 1841 and a quarter. There's an open gap right below it. I will default and take a trade at the open gap at 1840 to 1838. However, I'm cognizant. You need to be aware. It's poorly auctioned. So what does that mean? How do we handle a situation when it's poorly auctioned? If you look at yesterday when we were coming down, and what you will notice is that there was a lack of rotation. There was tick divergence all into this, and there was and that tick divergence actually started up, I believe, at 1849, 1850, which I labeled as a weak zone, or 1851, 1849, somewhere in here I'd labeled it as a weak zone. You can see that it offered resistance on the backside test down. I simply took one shot in here because I had no way of knowing. My assumption would have been we were going to shoot for this open gap. Okay, open gaps are usually enough to get a responsive buy first time in, but it's in a poorly auctioned area. Everything below 1841 and a quarter looks like crap. Okay, all the way down to 1826. So I will take a trade in here the first time. It's got to get out just like it did here. 15 minutes. If I don't have if I'm not close to my scale after 15 minutes, I will move stop to swing low at that time, and or yesterday as I handled it right out of the top of the zone, and I will only take one shot here. If it works, it works. If it doesn't work, it doesn't work. Again, we'll be very nicely stretched if we get to this point, and a better setup in my eyes would actually be to come in, test this open gap, and then close back above Monday's low, and that should or could cause a squeeze back to the upside. Give me just 1 second, guys. I apologize. Okay, so that gives the answer there, is that the trap trade is going to be easier for me to set up. Then I will take a trade down here, but you got to look at the price action as we're slipping down, right? And you got to make a judgment. Literally, when we got to the bottom of this area here, I forget where I took the trade, but I took it right off the top of the zone. I think maybe I forget where I took it in here, but it was right near the lows. I got my 2-point scale, and then I got stopped. I moved it up to whatever the swing low was at the moment, and it just didn't stick. I was hoping that this wouldn't occur, and that we would just get the responsive buy. So I was close, but no cigar, and I didn't want to get in the habit of trying to take 2 trades in here. Same thing today. I'll take 1 shot in these areas. I won't take a second shot, and it's pretty much got to work, and it's got to work in less than 10 minutes. You'll notice that all these zones where we're rejecting the last couple of days, 10 or 15 minutes has been getting the scale. So beyond that, it makes me a little bit nervous. Outside of lunchtime, if you're stuck in lunchtime, in which case the way I'll handle that is reduce trade size to handle the longer trade period. But again, you should be wrapped up by that point of the day. Below here, okay, I'll take a trade here. There's a zone here, 1832 3/4 to 1834 3/4. I'll tell you right now, it's weak. That's why it's not a white zone. There's no color in there. It is an area where we can get responsive buys if we see good tick divergence. I will not automatically be taking a trade here. This 1828 to 1830 will have us enormously stretched from the close today. Ah, damn, I just moved this. I need to find out where I had that a second ago. Why did I have that there? I'll figure it out in a moment. So 1866. If we get down to this 1830, that'll have us stretched by 36 points. I don't expect us to even get down here. So I will take a trade down here if we get here. It would have to probably be the end of the day, and something really bad will, someone had to miss earnings or some kind of news report. But I will try to stick a responsive trade from this point, and I'm actually probably willing to take a loss at this area on the entire trade size. I probably won't even scale and attempt to get us back towards either the open gap or Monday's low. I rarely do that, but that would be super stretched. Okay, on the upside, what will the upside look like today? Well, first of all, if we get above Globex high, okay, that really leaves us open, okay, obviously for a test of Friday's high, expect to move back down, but it does not mean that we're going to reject out and come back lower. We could easily come back for an intraday test of that 1882.50 area. I will take a trade here. I am simply cognizant that we could get rushed through and pushed. The reason I'm not so concerned about once we get extended, you'll notice this is 1866. This is a 20-point extension. This will be a 25-point extension. The reason why I'm willing to take a trade here is what was driving us was that the NASDAQ was getting a ton of money flooded into it, and ES was benefiting from the NASDAQ being so strong, and it was creating one-way markets, and we were getting, obviously, a ton of liquidity out of the Fed. And that rotation has changed clearly, where ES has become stronger and NQ has become weaker. Because of that, and because of the nature of the way ES normally trades, and I'm talking about over the last 10 years, the nature of ES is to do this. And it does it all the time. Wherever it's going, it just does this pattern, up and down, okay? This stuff where we had these opens and goes and just kept going like this every single day is the exception, not the rule. I'm not looking for that to resume. I'm looking for this stuff here where we're getting responsive buys, and you'll notice that each zone is providing a rotation. So I will have more confidence at each zone to take these trades. And so again, I want to remind everyone, I did move the zone. I don't know, I thought I just moved the zone, but I guess I didn't. So 1872 3/4, Globex high, the zone's going to be right there, to 1870 3/4. Let me get rid of that. There we go. Okay, it's almost 825. Let's see. Year to date. Oh, and then the year to date high. Remember, anything above here, Okay, the only area left is this 1900. Okay, there's a possible exhaustion point at 95, 97. I won't be trading it. I figured if we get above the year-to-date high, we have plenty of room for people to panic and come in, especially considering everyone thinks that, at least many professional traders I've spoken to, meaning institutional guys, are thinking that we have a test due of that 1800. I think if we get at 1892, all those guys who have accumulated shorts up in this area will get busted, and I'm not interested in standing above. This does create, by the way, a potential trap area. If we get above and then we close back below, it could give us a push back down, but I'll wait to see that. I'm not interested in stepping in this area. There's nothing here for me to step in on outside of scalp setups, and I generally don't call those out. So I think I was clear on where I'm looking to trade. It looks like we're opening at that 1870. So here's how it's likely to go this morning is my guess. Okay, if we open at this 1870 or lower, my guess is we're going to push back into this 1872 3/4, maybe a little bit beyond, get responsive buys, and they're going to make an attempt for gap fill or Globex low. That's my guess. And now that we have almost a 3-point rotation in, I will probably take this, but I will not call it over Skype or Twitter or any of that stuff. It'll be fast either way, and I just don't have time to type them in, okay? Give me just a second. I need to send the file out. Okay, so gap fill, 1863, 1866. Back. Let me fix this up here real quick. Okay, the way I'm going to do the zone here is 66. The zone's going to be 66 to 64 right here. Okay, I need a fast snap out of this area, and I'm probably going to aim for this 1865. And it would not be uncommon to see us come back, trade just beyond this, and then close back above Globex lows. And if we do that, don't be surprised if we come back and make an attempt to get to Friday's high. There is a lot of people are looking for a retest of this Friday's high, but also remember that the market likes to reject off of gap fills. The problem is the size of the rotation. So I probably will be taking, at this point, a test at exactly or very close to Globex high, right? I'm prepared to lose the 2 points if I get busted at that point. Happens. If we close above it as well, and then we close back below Monday's high, I will be looking for the trap trade. Again, back into gap fill. There's not a lot of space on that particular trade. If we can get below that 1864, okay, it leaves us a lot of room to re-auction back to the downside. And I'll be looking to take a long at the white zone. I will take a long at the white zone, I can tell you now, unless it's an open drive lower. And then below the white zone, there is a support, again, in addition to the white zone, there is a support area at 49, 51, okay? But it's truly poorly auctioned right down to this 47, okay? The problem is if I pit this area at 47, I have to extend the zone to 3 points. I don't like doing that. So usually the way I handle that is I just miss these trades. If it can't get into the zone, I just end up missing. You know, this is one of those situations where you come within a tick and then reject out, but there's support there. I'm simply opting for a test of Monday's low, and again, it has to get out of here quick. Be cognizant. If we come within a tick of this zone, I consider the top of the zone tested, and then I'm more cautious towards the back, and I'll want tick divergence to be able to take the trade on the move towards the back of the zone. Let me get this out to my clients real quick, and then 828. I wanted to go through NQ real quick. Okay, so importantly, keep an eye on NQ. Let me get this out, guys. Hold on one second. People are waiting on it. I think I got everybody. If anyone's still missing the file, let me know. Again, we're backing down to that 1869 3/4. I will be taking a shot at it at 1872, probably 1872 to 1872 and 3/4. If we can get up there for a shot to the short side, looking for a move towards the gap fill and Globex lows. I'm willing to lose the money there on that trade. NQ, really quick. Oh, sorry, Alan. 1 second. Got you, buddy. It took too much time to Okay, there's an open gap right here on NQ sitting at 35.83 roughly. And if we do get a push up to the upside, I will look to get rejection out of that area. Also keep in mind the 30s have been areas where we've been 30s and 60s are areas we've been rejecting out of. And oh, by the way, for the most part, I expect balance today in front of the Fed. Okay, so that means the first hour will be pretty active, and then it will be the first hour tends to be pretty active, and then we tend to go to plus or minus 500. In which case, the general context is breakouts tend to get sold, breakdowns tend to get bought. They tend to be head fakes. So those are the areas that I'm looking at, and I'm watching for traps in both areas, and we will go from there. I'll call them as I see them. I hope that was helpful. And I wish there was more zones in between here, but there was just a lot of poorly auctioned area actually yesterday. So I'll call them as I see them. And you see we're rejecting right off the backside of this downtrend line right here. And so hopefully we get a test of this 1872 here soon, and we can work from there. And NQ is also trying to come in already for gap fill. This morning hasn't quite made it there. So anyways, guys, I'll update them as I got them. You're welcome to send me questions, and I hope that was helpful. Have a great day. Oh, wait, we sell green 1880.50. 1880.50. I'd probably try to push back towards that 1882.50 if I could and get them to overreach there. Someone asked if I would sell the 1880.50. I'll have to base it on price action, but I'd like to see them push towards 1882.50 preferably, but I'll watch off of price action, which means I could end up taking it 1880.50. Just depends on the stretch in the PA as we're getting up here.